All right, hello, traders. It is Tuesday, October 1, 2024. We're in the home stretch of the last 3 months of the year. Lots of crazy stuff happening in the markets. Let's get to it. So I want to cover what's going on with the markets. We'll cover a little bit of the uh, port strike, dock workers strike. We'll talk about what's going on in the Middle East, how that's affecting energy prices. We're going to take a look at some of the charts. I put some of this stuff out last night. We'll take a look at the fear and greed index. Today, we'll take a look at the news for the week, and then we'll take a look at the portfolio as well, show you how we're working on things, and I'm going to show you some trades that we did today. So we were pretty active today. It was probably one of the most active days I have had putting on trades in both the Income Navigator account and the Lazy Trader account. So we'll cover both of those. Very different styles, but overall, same basic things that we're seeing in the markets that you want to take advantage of out there. But I think, as I said yesterday, bullish but cautious. And I think it's that cautious part we got to be on the lookout for, because you got this dock worker strike. Who knows how long that's going to go? If they don't step in, every day they're on strike is 5 days delayed on getting goods to where they go. We're heading into the holiday season. It's important to get goods where they are. I think a lot of people have really planned for it. So I think a lot of the goods are where they're supposed to be for the most part, but it doesn't mean there can't be some significant disruption in here. We'll keep an eye on what's going on with like Amazon and some of the others and see if it's affecting them as well. Certainly those tensions in the Middle East. You got Iran firing rockets over at Israel because of Israel killing the Hezbollah leader. Okay, so now you've got more tensions firing back up over there. Certainly is going to put a little bit of stress on oil as well. Oil prices certainly bounced today. We talked about it. Anyway, I've been bullish oil down here. I like where oil is. We actually did a couple different oil plays today overall. So we got some oil plays going on with it. Certainly is going to help our energy plays. And then bonds getting a good bid under them today. Big move up in bonds, very bullish. We added to more of our bond positions today. So let's take you in and take a quick look at the charts, see what we're seeing here. We're going to stick with the charts on TradingView right now, and we'll stick with that. Let me get myself off the screen so that you can see a little bit better what's going on here. But excuse my voice, pretty crackly at the end of the day. But overall, the S&P dropped about 1% today. So here's the E-mini futures here tipping over. You can see, MACD has been tipping over for about 6 days. RSI just bumping along this overbought level that's in here. And then I took the squeeze off for today just to bring the stochastic momentum index in, which is one of my favorite indicators, especially for swing trading, short-term trading. But I think you can also use it in some other capacities. But it's definitely overbought and tipping over. And when that happens, you're going to typically see, as this thing starts to, to crank down and you get the crossover, which we just did on the stochastic momentum index over its moving average. Typically, you see a bit of a sell-off. Now, is that going to be a big sell-off? Here again, this is the daily chart on the right-hand side that we're seeing. So you're talking about something from, maybe the 29th to the 10th, like a week or two, or something like that. That's going on. If we were over here, it's almost not even perceptible to you. It looks like one big, red bar here. Actually, it's the third to the 9th. So yeah, right in that area here. You can see it forming a little bit in this, and you can see a bit of a hanging man pattern here on the weekly, and then boom, dropped over. So if you take a look at that, there are some warning signs there. You potentially have a little bit of warning signs here on these, this kind of shooting star doji now into a, more of a spinning top here of indecision. But again, you're right at the top of the Bollinger Band that we see over in here. you're not really rolling over. You're still bullish. So this gives me again why I'm bullish. So you're not rolling over. You've got still good momentum to the upside on it. So you're going to get these little pieces of pullback that are going to happen in here. But you got to really dial into the daily chart here to see, okay, was this a good opportunity to maybe put a little short on something and get that trade on? We also have a bit of a gap in here that we could look to see this potentially get filled, which is also pretty close to this previous resistance area. So there's a lot going on in here right now overall. So a previous resistance area on the E-minis came down, okay, pumped right on, exactly right on the anchored VWAP, bounced off of that nicely, broke back through that. So now do we come back, touch this? We'd have to break through the 13, the 21, fill this gap potentially, and maybe hold this area in here. So that's what we'll be watching, but pretty good volume down day, a bit of a rollover, which would, again, I would think let's get a little bit of a pullback in here. Last time we dropped from about 5660 to about 5,400, so maybe 250 points, something like that. We'll see if we can get that. We're already down a bit from the highs, which would be about 5,880, so about 5,600, something along those lines, 5,650. I think this really sets up well as an area to watch. Is it get out of the market at all costs? Well, it is not right now. Okay, but I want you to be cautious. I want you to pay attention to what's going on. Now, last night, we talked about the fear and greed index, which ticked into the extreme greed category. Now, it's backed off today. Okay, but again, if you hit extreme greed, it's not going to stay there too long before it starts to back off. So another good indicator that we're moving. And then today, what did we have this morning? We had the ISM manufacturing PMI pretty much in line. The JOLTS job openings up just a fraction, so a little bit better. So really nothing terrible today on the economic front. Tomorrow we'll get some ADP non-farm employment numbers. We'll get some unemployment claims on Thursday, as always. And then on Friday is the big one. That is the non-farm payrolls and unemployment rates. We're going to see how things are going. But right now, again, inflation seems to be a bit under control. I don't think it's as good as the Fed thinks, but I think we still think the Fed are going to move 50 more basis points at least in the next two meetings, so 25 each in the next two meetings, 50 more before the end of the year. All right, so there's where we are on ES. NASDAQ took a pretty good hit today, down about 1.5% overall. So again, it's not holding up on this support level here, breaking down. This thing looks a lot worse to me than the S&P does. Okay, it did bounce off the 21-day moving average thing, which is a good sign. We'll see if we can keep this and bounce and recover off of this tomorrow. I mean, tomorrow could be just a big up day, rocking and rolling to the upside, and then today's just forgotten memory. However, you did trigger a bearish PSAR signal today. Didn't break any major supports, nothing like that. So again, nothing crazy happening. Okay, still seeing divergence in the RSI overall. So I think there's just weakness on everything. So let's point out a few more things to take a look at in here. And I want to look at the VIX today. In fact, let's just move this down here. Let's take a look at the VIX. Okay, VIX coming to life a bit. So you got a little bit of life in the VIX, not a whole lot on it, but we'll make this thing look even worse by expanding these out. But here's the VIX coming to life a bit. Last time we saw this big of an up move was back here on September 3rd, and then you can go back to Volmageddon back here, and you had a similar looking candle back here on Thursday the 1st before volatility really started to jump. Now again, this was the whole Japanese carry trade concern. I don't think we have that same concern in here. Doesn't mean VIX can't go up, doesn't mean volatility can't increase, but the same setup doesn't really exist right now. But do not forget the past, or you will be condemned to repeat it. So you got to make sure that, all right, if we start seeing similar patterns here, now we saw it here, and it just kind of fizzled out. Okay, but everybody started to stress. I think right now everyone's probably starting to stress a little bit. A 15% move up on the VIX today. Is it because of the tensions in the Middle East? Very possibly. Is it for other reasons out there? The dock workers strike? Potentially. I mean, these things all are starting to add up a bit, and you can't predict all of these news events. All you can do is, if you start to see signs that make you concerned, I think you have to take at least a little bit of action to prevent anything significant from happening. And if we look at the VVIX, the volatility of the VIX, pretty good, pretty good 3 days, moving well off of their lows. So the volatility of the VIX also starting to get heated up a bit, not like it was back in here, but again, eerily reminiscent of the beginning of this back on that Thursday. So you got to just pay attention to what's going. And I think one of the charts I like to take a look at here is, if we look at the VIX structure from today versus 3 months ago, and we compare the VIX 3 months out, I should say, not 3 months ago. And so we're looking really at near-term volatility is spiking. Okay? It's not longer-term volatility. So I think it's not like major fears that we're having a major problem that's going to last for a long point in time. You're seeing a spike in near-term volatility versus the 3-month VIX. Okay, this is where it is. It's all front-loaded. So you're seeing that term structure on the VIX. I know Igor in the service today pointed out, but again, we're more concerned about near-term risk, near-term VIX structure. I think this chart says it all right here. You're seeing the near-term VIX rising more than the 3-month of VIX out. So creating a little bit larger gap, but just relatively speaking, you got some nervous stuff happening in the markets. And if we take a look at that put call ratio, and let me actually let's go back to here for a second, and let's look at the put call ratio. We did it last night. We'll look at the put call ratio here. Now pay attention to the white line. That white line is your 10-day moving average, and that's what we're really focusing on, not the individual specific moves, but if we're falling here, the market's typically rising. Okay, but look at this move today. Now, we did spike up and then finished well off of our highs today. If the put call ratio starts to head higher, meaning we're adding much more puts than calls, and you're starting to see a bit of a defensive nature taking on, okay, that can spell a little bit of downside for the markets. So we'll keep an eye on this right now, but you're at a point where you're almost at this low, which, the oversold territory, which is about the 0.7. That's typically, if we get below that and start to reverse, that's obviously going to be something that we will keep an eye on. Let me make sure I line these up correctly, top and bottom. Okay, so if we see that start to rise, okay, the markets are typically going to fall a bit with that. So just another indicator that's not flashing bright red, sell, we're crashing, but again, caution is advised here. Don't get too over your skis, in my opinion. All right, let's take a look at a few other things, and then we'll move on. Oil today. So what happened in the oil markets today? I know there's a lot of lines on here for you, but I do have a couple of these anchor-weighted VWAPs on here, showing there's a lot of, overhead. In fact, let's take one off just to clean things up a little bit more. Let's just take a look at what's going on in oil. Now, big bounce today in oil. The weekly chart, which is what I've kind of been a bit banging the drum on to a small extent. This has been reversing. RSI has been improving. You got the stochastic momentum, which is oversold and now starting to curl up. So momentum has stopped to the downside, at least for the time being. And we're starting to see some upside potential. Momentum could be sideways, could be upside. Either way, I like oil. Oil is my largest holding by far. I've covered this with everybody. But if we look at it now, last night it was a lot larger. Oil's come down a little bit, but I've added some other trades to it. But right now, oil is, for my account, it's sitting at 38.6% of my account, while ES is about 21.6 and bonds are about 18%. So overall, right now, it's all oil in my account. That is the primary driver. I really love where oil is sitting down here. Can it go lower? Certainly. Can it go higher? Yes. I think when your RSI is right around this 41 here and right around 50, you're dead on. You know, you're a bit bullish. I think you're a lot more bullish here on the short term. Let's take a little simple line here. Is this a double bottom? Not exactly, but it's close. Okay, but it's definitely a higher high and a higher low off of this. Could be the nice start of something. Big candle today, big volume today. Again, driven by the Middle East. Okay, so is it legitimate? Okay, I don't know. Or is it just a catalyst? But either way, I love where we are sitting here with MACD rising a bit, RSI turning northward and heading up. So I like where both of these are. I think strangle plays are also something, and we actually did that in the Lazy Trader account. We put a strangle on USO, but I also put naked puts in ZB here in bonds. Sorry why I'm talking about bonds on it. But with oil moving up, okay, we put on a strangle today in here. Let's take a look at bonds since I kind of jumped into that. We also put a bunch of trades on in TLT, TMF, and ZB today. Why? Because bonds continue to look pretty nice, especially on the short term here. I like the farther out part of the curve. It's got a better interest rate. It's more attractive. I think people could be moving into bonds, especially if there's some concerns about the stock market. If this strike gets longer, if things escalate in the Middle East, if the payroll reports don't look great on Friday, I think a lot of these things add up to bonds being something that's a lot more attractive now than they were. So we are very long bonds. So I'm long oil right now, and I'm long bonds right now. And what do I want to be in? Well, in the main Income Navigator account, I want to be in ZB. We added a new naked put today. So we went out about 52 days and sold a naked put on that. So not super long, not a leap or anything, but I wanted to sell it. And if we drop down, okay, anywhere to this 120-ish range where you can see the see your 200-day moving average on this. In fact, what do we got? We got one too many. No, I think it's all right. So we'll figure out what that. Oh, that's there to start your. Trend line. Okay, I'm just moving that a bit. Two lines here. I've got to sort these out. Okay, oh, this is the anchored VWAP. Okay, so that's coming. I'm sure. Well, it's coming from back down in here. I'm sorry. Took me a while. I'm going to get rid of that off of there because it's a little too confusing and a little too yellow. It was an older thing. All right, sorry about that. All right, so let's just keep going on bonds, but I do like bonds on the shorter term here. Longer term, you're a little overdone, but still can continue to keep moving. So I don't think we have a big sell-off coming, but I like bonds. So we added ZB today into the Income Navigator account. And then over in the Lazy Trader account, we added new leaps, okay, on TLT at 150 because I'm still bullish those bonds. We added also more TMF, we added a 30 DTE naked put. I would be happy with assignment on this as well. Again, this is not something I want to hold long term. Don't love TMF for the long term, but I do like this bounce that we've been seeing. I love the way this stochastic momentum is starting to round up. RSI is moving up, MACD is moving up. I love where TMF is. I want to be long TMF. So we own shares. We have covered calls on those shares, which is totally fine for right now, because those covered calls are way up here around 65 at the top of the Bollinger Band. All right, and then I wanted to get even more into this today, so we did sell the 55 puts, which is down here around the the 200-day moving average. If we would get there, then I would be more than willing to take assignment on these, just like I am on the ZB puts as well. All right, so there's oil. Gold having a nice recovery day today. Nothing to do on oil, on gold here. I like the pullback. It can keep marching higher. It's overbought. It's looking a little weak, in my opinion, on the daily chart, but the weekly still looks pretty strong. I think I just leave it alone. Don't try to jump in. Copper, nice day today on copper. I think this thing, though, potentially could be giving us an opportunity, if it pulls back a little bit more, to get back in on some copper. Silver also up. So again, every commodity is up. China is driving this commodity little boom that we've got going on right now. We'll see if that continues. But again, I think we're pulling back. I'm holding off on all of these at the present time. And the Aussie dollar, that pulled off today. Great for our Strangles. So a huge up day for our Strangles on the Aussie dollar futures. So good stuff there overall. All right, so there's where, again, a handful of the things that are going on today are falling. Let's take a quick look at the account, and then we'll move on for you. So I'm giving you a couple different trade opportunities. I gave you 11 of them last night. Take advantage. Take a look at some of these. Do your research and decide what is right for you. I'm just showing you what I'm seeing. What you've got to do is figure out what the best trades are for you. All right. So the Aussie dollar, nice move today. We were up nicely on our strangle there. Oil, certainly a nice move here. We've got a strangle, though. You don't want to see it kicking up too high, but I'm not worried about this strangle, because right now it's the move in volatility, this IV rank moving up. That's what knocked us down, not a price move. Okay, we're well out of this. We're 20 points away to the upside. That's not what's moving this strangle. It's volatility, so I'm not too concerned about that at all. We've got a naked put sitting in here. We're up 73%. We'll leave that run. We've also got a 112 trade here, up 32%. We'll let that thing continue to cook. It's only been on for 15 days. Love the setup on this particular one right now. And then we've got a naked put that we rolled, which is up 54%. That thing is in great shape, up about $3,600. So we got some good trades brewing there. We'll come back to ES at the end. Gold, we're just sitting on a put debit spread left over from a 112 that we've closed. Don't expect that to do anything. Bonds. Okay, we've got a naked put in bonds. This thing's in great shape. It's up 42%, almost 43% now in 25 days. We also added some calls to that, which are up 21% now in just 12 days. So a little two-sided action for us, which I do like that. And then here we've also got a 112 trade on, which is right now up about 32%. We've got a naked put that we just put on today. This is down a bit because we put it on at the low of the day, and we bounced a little bit, or at the high of the day, I should say, and we tailed off just a tad. And then we've got another naked put that is sitting here just down slightly, but a nice recovery day today. It's only been 20 days. So I like where we are in bonds. We just keep playing the up and down. On that TLT, we're sitting on a free leap that we started the trade, but we've been writing covered calls against it. So we're still making income while we wait for our trade to play out. Let's take a look at ES. First off, we had a hedge expiring today, so we added a brand new 14 DTE hedge. So new 14 DTE hedge is in good shape. we're sitting on put debit spread, put debit spread. We're sitting here on a 112 trade that is getting close to the naked puts coming off. Another put debit spread. This is a wide 200 pointer. We've got just the long puts, or the naked puts of a calendarized 112. We just put it on today, so it's down. On the session today, weird that I'm getting, the P&L on the day should only be $37, not $7.60. So something funky with Tasty Trade here, but we'll be fine with that particular trade. We've got another long-term 112 here that we're 70% on the naked puts. Okay. Another calendarized FB 112 naked put. This thing is down a fraction now. And then we've got a 112 trade on. We're sitting at 76% on the naked puts. We're at 32% on this old 111 that just keeps hanging in there. 84 days in, still profitable. It survived Volmageddon, and I've taken it down from 6 to 4. I'm just going to let it ride out. Again, I'm bullish but cautious. If I see things starting to deteriorate more, I'll take these naked puts off, and I'll be stuck with 100 wide here put spread. So I have options on all of these. I really have some pretty good options. Another put debit spread and another 112 that's only been on 41 days, and we're already up 26% on the nakeds. That's great. We've got a vol hedge that's sitting here that is in good shape. Nothing to do with it at this point in time. It's just kind of just sitting there. Okay. 112 trade, that's up 35% on the naked puts. Okay. We added a naked call today. So just something to take advantage of the volatility move. So increase in the VIX as well as a little toppiness. So we're out at 63.50. Okay. 63.50 from here is about 540 points from here. So that is over 9% away to the upside. Doesn't mean we can't crank 9% in a short period of time. This will be a short-term trade. I will not hold it through the election. I'm just looking at a little bit of, if there's a little bit of weakness here, we'll pay attention to it. But it's sitting out there decently. So we'll just let it cook. We got a regenerating fly hedge that's still operating here. Nothing to do with that. It's going to be fine if the market falls. Here's a naked put that we've got that's just sitting here down 12%. So it's been on for 11 days. Nothing to do there. 112 that's brand new, only 11 days old. Here's the FB 112 put debit spread. So this thing's up nicely. Again, you can see that today's moves, if you remember what the naked puts were down, but the put debit spread's up. We added a new regenerating hedge trade today. We still have a regenerating fly hedge. Okay, nice Vega, nice Vega. We continue to adjust these trades and play them out, which is helping keep our Vega under control. And as these things age, they really start to create a bit of a put wall. And then we also have these put debit spread walls that we've been building with these short-term naked puts that we used to pay for them. So those naked puts will hopefully come off within 30 days or so, and we'll be left over with nice put debit spreads that we can use for the account. So overall, like where we are, kind of a mixed day today, nothing exciting there. Oil up, bonds up, ES down, a little bit of a washout overall, but I think not too shabby overall. So what we're looking at is keeping an eye on what's happening in the Middle East. We'll keep an eye on what's going on with oil. We're going to keep an eye on that dock worker strike. I want you to be cautious. I don't want you to be panicky. I don't want you to close everything. Okay. But if you're super long, and if we're looking at our account today, I didn't have give me a trade update, but I will. Delta's at 275, so we're not overly positive on Delta. So we've got a really good Delta. Theta sitting at 11 70, our Vega is at 6,300, which is about a 5-to-1-ish ratio, maybe a tad high for us, but we have a couple of those extra naked puts on that are paying for some of these calendarized 112s that we've got that should turn into hedges. We're going to keep an eye on volatility here. If it continues to spike, we'll make appropriate adjustments, but long bonds, long oil, cautious on ES, having appropriate hedges in place, building those put walls, having the vol hedge in place, all great stuff for our account. If you liked this video and you got something out of it, click the like button down below. If you would, I would appreciate it. So click the like button down below. If you're not a subscriber to the YouTube channel, go ahead and do that. And if you want to see what we're doing with the members in the Discord, certainly you can go into the description down below, use the code there, jump into the Discord, and you can catch the trades live and all of the research that we're doing, as well as all of the different trade strategies, the adjustments. Igor going into some really interesting different trade adjustments that he's doing. So we're giving you the education to hopefully make you a better trader. And we are absolutely on the right path right now, on the comeback. So we'll see you later. Enjoy the rest of your evening. Bye-bye.